Good morning and welcome to the Trade Setup right here on BloombergQuint Live. It's Friday and it's not as clear a day as most days would be. But let's get back to the news first, then we'll get to the Trade Setup. So, by the way, it's important to mark what's happening in the rest of the world and not just the US too. And in Germany yesterday, the inflation data that came out was red hot. So the German inflation rose at its fastest pace in almost 30 years, if I'm not wrong. And I think as per one of the news portals, the German December numbers would mark the worst inflation year since 1993. Yeah, so going back 28 years, the worst inflation number, the pace fastest in almost 30 years. So clearly, the inflationary pressures are hurting economies across the world. Let me put it that way. Now, US markets were a bit of a mixed bag yesterday at about 10, 10, 30, 11 when I was seeing them, but I think they've ended lower. So they ended lower, no great shakes, minor losses. And the futures, I think, are trading with some bit of positivity too. And which is why I say that there's no clear, how do I say, trend out there. Unless I'm very wrong, the jobs data is slated to come out later today in the US. And if that data is strong, then people would believe the inflationary pressures could be even stronger. And I think that is something that everybody would be watching out for. So from a global markets perspective, you've got to watch out for the jobs data that comes out from the US markets later today. So keep that in mind. By the way, the yields are kind of showing their hand already. So remember yesterday or day before, we were talking about how the last 10 days, the yields have shot up. Now look at this chart and it shows how hot a week it is because the 10-year yield in the US has seen the biggest weekly jump since June 2020. That's going back about 18 months. And since it was COVID impacted 18 months, they seem like 18 years, to be honest. So that's the kind of move that's happened in the 10-year. And if the problem is not just if the yields move up, viewers. Keep in mind, almost every global expert will tell you that the problem is if the yields move up too fast, too soon, that unnerves the market. So we hope that from market stability perspective, that the jump in the yields is a bit more gradual going ahead, if indeed they are to move up. So let's wait and watch. Omicron, and if there are subsequent pushbacks, and if not lockdowns, then uh, some bit of containment measures across the world that might just cool off inflation a little bit as well. By the way, the Mumbai commissioner, as the BloombergQuint story said yesterday, has ruled out the municipal commissioner has ruled out that Mumbai will go into a lockdown. Previously, there were rumors that if indeed the cases cross 20,000 in Mumbai, which they have done, by the way, then Mumbai will go into a lockdown. I think that is not happening. That's been ruled out. That story is there on BloombergQuint. Also there on my Twitter handle. I've put it out. You may want to check that. Okay, yeah, this is the story that I'm talking about. Virat, thank you for that. SGX Nifty will come up on your screen next, and we'll just show you how we are placed for that today. I presume that no major shakes and about 0.15%. So no major shakes, as I said, because the market seemed close to low. The futures are marginally in the green. So not as clear a signal as most days would show you. By the way, yesterday, while the index closed lower and was down about 1.4% at the point of time, the broader markets closed flat. And therefore, the MOE function will probably not look as bad, maybe won't look as bad as one would have thought. 192 declines to about advances to 301 declines. So not as bad as what the index picture would have shown, and a bunch of stocks doing really well, from textiles to finance to KPIT on that Goldman Sachs note. And as expensive as that stock is, it continues to move higher. Some auto ancillaries, etc., did well. There were some tech names which came off too. And Macrotech came off yesterday, which I think will correct itself today, and we'll tell you why. But yeah, two days of a cool off for IT services companies. Let's see if this lasts. I doubt it would, and that actually a part of my trade setup. So I think the risk reward remains against going leverage longs or leverage buy on dips. Could there be a buy on dip strategy employed? Yes. Is this the time to buy on dips? No, I don't know. But is this the time to buy leverage on a dip basis? Most certainly not. I think the risk reward continues to remain in favor of staying on the sidelines, waiting for some more better opportunities to put your hands in. Watch this. FIs sold about 3,013 crores in index futures. and unwound some significant long positions. No, let's just stick with the first plate, Virat, if we can. The FI long exposure is back to square one at about 66%. And yes, now maybe we can forward and then come back again. So in index futures, they've sold 3,000 crores, and yesterday FI sold 1926 crores in cash as well. So after 4 days of a hiatus, FIs have come back with a bang. You could very safely assume that after the holiday move is over, FIs are again resuming their selling positions. Let's see what the cash number looks like in today's session. And the last line, I firmly believe that there is a high probability of the tech majors seeing some bottom fishing ahead of the results on the 12th. So could it happen today or could it happen sometime next week? I don't know. But there's been a couple of days of a corrective move in IT. It's a strong sector. It's expected to deliver strong numbers. It's finding favor from uh, most people that I speak to on the long side at least. So let's wait and watch. I would suspect that a very steep correction in technology is probably ruled out now. So that's the view as far as the trade setup goes. Now, to some individual names and that we should watch out for. Everybody's known about Titan, but I'll recap the numbers any which ways. The jewelry division grew about 37% YOY, driven by festive purchases. Now, remember, this is very important because in Q3 last year, the jewelry business had a 16% growth. It wasn't as bad. On that base, to grow 37% is actually a really strong performance. They added about 14 Tanishq stores on a net basis during the quarter. Watches and wearables saw strong growth as well, momentum driven by the tier two towns for Titan. So all in all, did a really good show, but it is an expensive stock, I think. There's a Credit Suisse note which came out today, wherein they are saying that they are neutral. The target price is higher than the current market price, but they're neutral on the stock. They are not extremely positive, if you will. The target price has been raised to 2,700 from Credit Suisse. They say that the 3Q sees large beat in the jewelry business. They see good traction in watches and eyewear as well, and they've raised the earnings estimates by 7%. I would say that with the kind of jewelry business performance that they've shown, yes, it makes sense to kind of go out and raise the EPS estimates as well. I think they're neutral only because the the stock is not cheap, but very good performance. If the stock reacts positively today, one shouldn't be surprised because the performance is good. If it doesn't, then you blame it on the valuations. Godrej Consumer, it's not new news, and therefore I don't know what kind of corrective move happens, but clearly not a good quarterly update. So they've flagged the low volume growth in quarter three due to cost inflation. They say that in India, the company expects to deliver close to high single digit sales growth. That's it, largely driven by pricing, so no volumes, precisely the point. Inflation level remain at unprecedented levels, they say, resulting in high gross margin dilution and operating margin dilution as well, YOY basis. Indonesia business remains a challenge, expecting a marginal decline in constant currency sales growth as well. All in all, not a good update from Godrej Consumer. My gut view is, viewers, that despite the fact that it was known and despite a couple of brokerages saying that they are pricing this in and it could be they are neutral or they are in a buy mode, I suspect that there could be a bit of a challenge for Godrej Consumer today. Let's wait and watch. I could be wrong. But for a Godrej Consumer shareholders perspective, I hope I'm wrong. Macro tech, like I said, the socket corrected yesterday, but suffice to say, a very strong probability that it may bounce back a little bit. And is this the sign of what will come from real estate? That's the question you got to ask yourself. Remember, India Bulls gave out a very strong release yesterday. Macrotech's release today, pre-sales up 40% at 2608 crores. It's, according to them, the best quarterly performance in the last 12 quarters. That tells you a story or two. It's not just the last 6 months, 9 months, 12 months. Last 12 quarters is last 3 years. That's pretty strong. Collection up 44% at 2127. Net debt for India business is at 9925 crores. So they've brought that down as well. Now, viewers, remember, every quarter, if their sales numbers move up, then it will become the best performance in last many quarters because the base is higher now. But the point is the base is higher and they're growing pre-sales at 40%, which is actually a really good sign. Sure, last quarter could have been impacted. Last quarter, this last same time last year, the quarter could have had some COVID impacts as well. But yeah, I think the proof of the pudding would be if Macrotech, if a Prestige, if some of the others are able to maintain the sales momentum in the Jan, Feb, March quarter, wherein we are hit with this Omicron threat. That would be a real kicker. but I suspect that this will be taken positively by the markets. Let's wait and watch if the stock reacts positively. HGS, I suspect, would be that one stock of the day which could likely have a very big gap down. And now, why do I say this? They've announced an interim and a special dividend, whatever you call it, of 150 rupees per share and a 1:1 bonus. Now, presuming that it all gets effective, with a large, there's 150 or 300 rupees depending on when the effective dates would be. I haven't checked that, but there is a bonus available. But the point being, it doesn't really matter because of the next line. One, that the alert that the dividend quantum is much lower than market estimates. People were factoring in sky high numbers for the dividend, right? I mean, the numbers are very high because everybody anticipated that if they've sold off the cash cow, they'll give the money back to the shareholders. Instead, what HGS has said that the funds generated from the divestment will be strategically invested in building HGS technology capabilities. Now, um, remains to be seen. Maybe it's a good move for the company in the long run, but usually I've seen viewers that in companies, that it's happened in a couple of pharma companies in the past as well, that when they've come out with when they've sold off the motherhood business and then shy away from returning the money to shareholders, people don't like that. That corporate action is not liked, and therefore I suspect that there could be a bit of a problem for HGS stock in the session today. Most likely it will correct. Anand Rathi Wealth came out with the good numbers, really. Revenue is up 54% at 105 crores. Margins 41.6% versus 30%. And consolidated PAT up 145% at 32 crores. But Q3 PAT is 70% of last year's PAT. At 32 crores, it was FY20 PAT was about 44.5 crores. So they've already done 32 crores, which is quite stunning, really. Can FY22 PAT move much higher at about 120 crores or thereabouts? And therefore, does it make the stock look cheap? That's the key question. I think that's a key question that some people would be asking. Let's wait and watch if that happens. I don't have an answer to that, but certainly a good performance, and maybe the stock reacts. So maybe macro tech and some of the real estate plays, maybe Anand Rathi Wealth and some of the other wealth plays, maybe all of these do well. What will not do well would be HGS. What will probably not do well would be Godrej Consumer, and to an extent, Titan could do well because the update is rock solid, just that it's an expensive stock. I would suspect viewers that don't go out leverage buying. The strong momentum sectors, the likes of sugar or ethanol, however you call it, could all do well. Real estate could do well, but be very choosy. And just lastly, before we wrap up this trade setup, if you really want to know what's happening with sugar, I think 10 a.m. today, we're speaking to the management of Sri Renuka Sugars, and then we're getting in the analysts from ICICI Direct to give us an analyst perspective as well of whether the run-up is too fast, too soon, or if there is more in store. So if you want to understand more about sugar, and it'll be long conversations, you will get all the dope that you want, do try and tune in at 10 a.m. today, or watch it later on, of course, but 10 a.m. you will get to see that whole conversation live. Thanks so much for tuning into the Trade Setup. Have a safe, profitable day ahead, and if you're stepping out, please stay masked up.